You have heard this one word 1,000 times. On the news, from friends, in every conversation about money, shares. But if someone stopped you and asked, what actually is a share? Could you answer it precisely? Most people can't. And that's a problem, because the share is the single most important object in the entire stock market. So in this episode, we're going to define it properly, from the ground up. Every single thing you'll ever hear about investing, the Sensex, the NASDAQ, IPOs, dividends, market crashes, fortunes made and lost, all of it is built on top of this one tiny object, the share. It's the atom of the entire market. Get this one idea crystal clear, and the whole market opens up. Here is the definition in its simplest form. A share is one small, equal unit of ownership in a company. Picture taking an entire company, its buildings, its brand, its future profits, all of it, and slicing it into many identical little pieces. Each piece is a share. When you own one, you're not holding a coupon or a betting slip. You're holding a real legal slice of a real company. If the company owns a factory, you own a tiny sliver of that factory. Let's make this real with numbers. Imagine a company worth exactly $1 million. The company divides its ownership into 1,000 equal shares. So what's each share worth? Simple division. $1 million split into 1,000 pieces is $1,000 per share. Each share represents 1/1,000th of the entire company. Now, one step further, because it's the moment it clicks for most people. If you buy 10 of those 1,000 shares, what do you own? 10 out of 1,000. That's 1% of the whole company. You are, quite literally, a 1% owner of that million-dollar business. Ownership just stopped being a vague feeling and became simple arithmetic, something you can count, divide, buy, and sell. Let's clear up something that quietly confuses almost everyone. A share is the specific countable unit of ownership. You say, I own 50 shares. Stock is the broader term for ownership in general. You say, I own stock in that company, or the stock market. Think of it like gold. You own gold, but you measure it in grams. You own stock, but you count it in shares. Here's a term that trips up a huge number of beginners. Face value, also called par value. When a company first creates its shares, it assigns each one a small base value called face value in India, par value in the US, often just a tiny fraction of $1, like 10 cents. But here's the critical point. The face value is not what the share is actually worth. Think of it as the number on the share's birth certificate, not its price in the real world. So if face value isn't what a share is worth, what is? That's the market price, the number that actually matters to you as an investor. It's simply what people are genuinely willing to pay for that share right now. It isn't set by the company. It's set by the endless tug of war between buyers and sellers, and it changes every single second the market is open. A share with a face value of 10 cents might trade at $2,000 in the market. Let's put them side by side. Face value is set by the company at creation and almost never changes. It's a nominal accounting figure. Market price is set by the market right now, changes every second and is what it's actually worth. Investors watch the market price, not the face value. Owning a share isn't just a number on a screen. It's a real bundle of rights. First, a share of the profits, usually paid as a dividend. Second, a claim on the company's growth. As the business becomes more valuable, your slice does too. Third, a vote in the company's big decisions. One share, one vote. And fourth, a claim on what's left if the company is ever wound up, after all debts are paid. Now, for something that surprises most beginners, Not all shares are the same. A single company can issue different types of shares. Two great families tower above the rest. The first is the equity share, known in the U.S. as common stock, the standard full ownership share. The second is the preference share, known as preferred stock, which trades some rights for certain priorities. Let's start with the equity share, common stock. It carries voting rights, a genuine say in how the company is run. Its dividend varies, paid from whatever profit is left over, generous in a good year, nothing in a hard one. Equity shareholders sit at the back of the queue if the company winds up, but in exchange, they get the full unlimited upside, no cap on how much they can be worth. Most risk, biggest potential reward. The preference share, preferred stock, is almost a mirror image. It usually carries no voting rights, but in exchange, it pays a fixed, steady dividend that arrives like clockwork. And it gets priority, paid before equity shareholders, both in dividends and if the company winds up. The trade-off, its upside, is capped. It behaves a little like a bond wearing a share's clothes. Let's put them right next to each other. Equity shares give you a vote. Preference shares usually don't. Equity pays a variable dividend. Preference pays a fixed one. Preference shareholders get paid before equity shareholders, though both come after lenders. And equity offers uncapped upside with the most risk, while preference is steadier but capped. Step back, and a pattern appears, the same one that runs through this whole channel: risk and reward. The lender is merely owed money, the safest spot. A step up in both risk and reward is the preference shareholder. And at the far end, taking the most risk for the greatest possible reward, is the equity owner. Deciding where on that staircase you want to stand is one of the most important choices any investor makes. As always, let's line up the words across both countries. A unit of ownership is a share in both India and the U.S. The base value assigned at creation is the face value in India, the par value in the U.S. The standard share is the equity share in India, common stock in the U.S., and the priority share is the preference share in India, preferred stock in America. Same idea, different vocabulary. Let's bring this keystone episode together. A share is one small, equal unit of ownership, a real, legal slice of a real business. Face value is a nominal figure. Market price is what it's actually worth. Owning a share gives you a bundle of rights, profits, growth, a vote, and a final claim. Equity shares carry voting rights and uncapped upside. Preference shares trade the vote for a fixed dividend and priority. Master those points, and you understand the single most important object in all of investing. So, there it is. You can now answer precisely and confidently the question this entire channel is built around: what is a share? But knowing what a share is only the beginning, because owning one hands you real, tangible powers and real money. What exactly are your rights as a shareholder? How does that dividend actually reach your pocket? That's exactly where we go next. If this finally made the share, the heart of the whole stock market, crystal clear for you, please hit that subscribe button. It's completely free, and it's the single biggest way you help this channel grow and reach more people just starting out. See you there.